Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, August 6, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, let's state the obvious first and we'll work backwards from there. They went up to test from the underside the 100-period moving average, coinciding with the general vicinity of Friday's low. And in my opinion, and when we show an hourly chart, I would say they were summarily rejected. But wait, there's more. So you take a look at this daily chart and say, well, that's a poor close. When you see that all that downside after the tag and touch of the 100-period moving average really happened in the last, let's just say, hour and a half of trading. You know, there's an old adage in the trading business, it's not how they open them, it's how they close them. It's where they close on the day that's the most important thing. That's where you take the most cue, the closing print. So net, they were up a whole lot more earlier in the day. These are a lot of points. This is big point expansion. We'll get into more of that later. And hence they came down a lot of points into the end of the day. So there's always a but wait, there's more. Well, maybe not always, but this time there is. There's a couple of things going on. First, let's note, just as a general rule, just for knowledge, we're going to tuck it away for later. Where was low of day today? Generally speaking, you look at the daily chart and you say, okay, it was right on top of that trend line. Yeah. Now you know what's coming next. No accidents or coincidences. Tuck that one away for later. Now you take a look at the hourly chart and we hearken back to yesterday, and traders in the live room will understand from this morning's opening commentary what I said was, hey, look, they're setting this thing up for one of these higher low situations. So they put in a low early on Monday, and then all of a sudden they go up and they pull back. They have a normal garden variety retracement, put in a higher low, and then you can call this an A, B, C. You have an A leg up off the low, B leg is the pullback, and C leg, official completion, is above the high of the A leg, which is here. And they did all that, and they went higher today, threatened to fill the gap, got into the lows from Friday, and then were, like I said before, summarily rejected. But wait, there's more. Now, there's obviously two things that can happen. Market can go up, market go down. You don't have to be a genius to figure that out. However, one side of the equation is, remember what I said this morning, for those of you that were inside the numbers live, said they're setting up for one of these higher low situations, the A, B, C pattern scenario. Well, over here, you could say, hey, look, you got a trend line developing here. And if you draw this trend line out and you keep it there for tomorrow morning, you say, hey, maybe they're just coming up for another touch and another rally leg to go up and fill the gap and or maybe higher. So that is on the table. I would file that one away for possibility number A. What about possibility number B? Back to the daily chart. You had a day and a half, almost 2 full days of bouncing, dead cat bounce situation. And here comes the test of the lows. We talked about it yesterday. Don't rule out. In fact, I would expect, rather than discount, a test of the low area at some point in time. Doesn't have to be this week. Could be next week. Could be tomorrow. But a test of the low. Not saying it has to happen. Not saying I or anybody else knows that it is going to happen. What I'm saying is, in these scenarios where markets are trying to put in a low, working on a low, the process of a low, a lot of times there will be a retest of the low. Sometimes they come up short, other times they spike them through. Food for thought. These are all puzzle pieces. They're on the table as we develop the picture, the bigger picture of where she's headed. How about a lazy swing trader, automagical algo system intermission? Yesterday in the Monday morning flush operation, I showed you we had buys yesterday. One of them was First Solar. We had a buy at 197.59, sell Alert goes out to 1305. A one-day wonder, I think it was right around 8 or 9%. Not bad for a rookie. By the way, before we move on to a couple of other things, just want to point something out. We were looking for a low. Monday morning, the market put in a low. By the high today, she was up about 200 handles in the S&P, total points, maybe just short of 200 handles. Regardless of what happens from here, that qualifies for a low. Doesn't mean the low has to stick for 6 months, but when you rally 200 points, that is a low that can be classified in the cycle low that I was looking for. So that is complete. We can check that box. Doesn't mean she's not going up another 200 or 300 points. Doesn't mean she's not going to retest the low first. It doesn't mean either of those things. It means a bounce of 200 points off the low qualifies as a low we were looking for around the first part of August. How you doing? What about inside the numbers? Let's see what we were talking about right out of the gate from 0 dark 30. If you're active trading the S&P or would like to be trading the S&P, this is an invaluable tool. I'm giving you commentary. I'm helping you get a feel for the market. I'm giving you the numbers. I'm telling you where the trades are. The overnight crew had a pretty big jam session up north, but they gave it up around wake-up time this morning. The bulls are simply looking for follow-through, which they did get today. The bears are looking for a quick test of the lows and or lower. We'll start today with the trend line coming in around 518 and a quarter, give or take. It's hard to pinpoint to the penny. 518 and a quarter. There's a 5-minute chart of the SPY. Right of the vertical is today's activity. And you can see where low of day coincides with said trend line. Just below, we have a gap left open yesterday at 517.40. And what I discuss with traders in the live room, for example, is, and we talk about this all the time, a lot of times what they do is they don't fill the gap right away. They come up short. So they screw two factions of traders. Those looking to exit who have a short, exit at the gap in this particular case. And then those traders looking to buy the gap for a bounce back in the other direction, they don't let either of them, A, exit or B, get in, and therefore screwing two factions of traders. So we know about that, so the trend line was a likely bounce. We have the negative stuff if they were to get below the gap, and the stuff down below, they didn't do that today, so we don't have to worry about it. Seatbelts on, trade tables in the upright position. The focus is on the trend line around 518 and a quarter, 518.15. Hard to pinpoint it to the number. Just reiterating the stuff, narrowing things down a little bit. Pause the video, read the notes, and go back to the chart to double check the work. Here at 9 o'clock, we're coming out with some fresh stuff. Early pivot is 519.70. That's important information. Why is it important information? Very simple. It's a target for those traders that bought the trend line. Doesn't seem like much on this chart, but this is a lot of points. From around 518 to 519.70 is 17 S&P handles in minutes. If they're above the pivot, we have the numbers above, and you'll see more come out later. Now, 918. Remember, 518.15, give or take, is the trend line with the gap just below. Should be a bull-bear battle around there. Only below the gap opens the door for the lower stuff mentioned before. Where would they bounce to? How about back to the pivot at 519.70 for starters? Using the 80-20 rule, this is what would normally happen. Hence, this was one of my morning trade setups. Bounce back to the pivot from a really important place. Pause the video, read the notes, go back to the chart, and double check the work. As you can see, she tests the pivot right out of the gate, falls to test the trend line, spikes the trend line by a couple of pennies, rips it right back up to the pivot, quick 17 points in your pocket right out of the chute. Big time participation in the live room, inside the numbers, big time numbers shown on this trade. Because we're only talking scalp so far with potential. What about the potential? What about holding a trailer? Look at all this. You would be shocked at some of the numbers that got put up today by traders. Those of you that were the traders in the live room today inside the numbers, help a brother out. Post a comment under the video. Let them know what happened this morning. Let them know what we did as a group. Can we help other people out that are struggling in this business, struggling to make money, struggling to understand how the market works? They need help. We're here to help. We're actually helping people learn how to make money in the market. It's not sizzle. This is delivery of the steak. You want sizzle? Go visit one of those rah-rah places. This is not that. This is disciplined approach, treating it as a business, getting a hold of your emotions, understanding your emotions so that you can overcome a lot of the pitfalls that traders don't even realize they fall into each and every day. We talk about them in the live room all the time. I speak from the heart, from experience. I've made all these errors. It's what enabled me to fix it in the how many times do you have to get punched in the face until you move out of the way routines. You either learn how this thing works or you got to get out of the business. Well, I was fortunate enough to learn how this thing works. Now I'm passing the knowledge along in the live room each and every day. Pause the video. Read the notes, go back to the chart, and double check the work. It's all in here. You get the point. We were buyers at the dead low of the day. You don't really need to know much more than that other than how much did you make. Everybody's got their number for today. IWM's got a similar chart to the spiders today. They spiked it higher. They didn't quite get to their 50-period moving average from underneath. There's a gap above that. They sold off into the end of the day. It's the same routine. It's all the same market per se. When they're moving big, they're all kind of moving in tandem. Will we get a retest of the low or will we get another push higher to fill the gap? And don't forget, they're going to eventually try and do a normal garden variety retracement. Let's see what she did so far. Here's a 25% retracement. Hasn't even got to a 382, which also coincides with an open gap. So around 209, we'll call it. It's just short of 209, give or take, is an open gap and a 382 retracement. Can she get to 212.69, give or take, 212.70, 213, let's say, as a 50% retracement? Yeah, but she's not going to go up every day. There's going to look like days are going to go retest the lows, and then they're going to look like days where there's just a plethora of traders getting a pie in the face because it's another squeeze operation. That's the way these things work. 200-period moving average, last line of defense from a moving average perspective on the daily chart. Look at the weekly chart, 200-period moving average on the weekly chart. It's pretty important. No accident or coincidence. She bounced it there last week. Yesterday, I should say, not last week, yesterday. What about the folks down at the transportation department? Up 1.46% today. It's a pretty good day. That had relative strength against the SPY or S&P. S&P was up around 1%. The IWM was up around 1%. Transports were up a little more. My second favorite market leading indicator, a number one canary in the coal mine. They are smack dab in the middle of this channel that we've been talking about day after day after day, hovering right around and underneath these moving averages. No revelation here. They go from the top of the channel toward the bottom of the channel, bottom of the channel to the top of the channel, top of the channel toward the bottom of the channel. Do you see? We talked about this before they made these moves, and everybody's still surprised when they made them because in real time, in the heat of the moment per se, it's hard to believe that that's all they're doing. We forget about that discussion in these videos, and in real time when you see something like this, not that everybody's watching the transports intraday, but just as a case in point, in real time, even when we talk about it night after night, when you go down to the daily chart, it's hard to see once they're breaking out. Oh, look, they're breaking out. Well, you think that they're breaking out until all of a sudden, a day or two later, they're right back smack in the middle of the thing. These long-term trend lines, you have to look at them from a weekly chart perspective. Did she close a week above? And the answer is, no, she didn't. Write that down. Put it on a sticky note. Same type of routine for the Q people today. The candle looks very similar to the IWM we just looked at, very similar to the spider we just looked at. No change in the story. They still haven't filled this gap up there. They're either going to fill the gap or they're going to come down and run a test in the vicinity, neighborhood of the lows. Maybe just a retest of the 200 period moving average, something down there. It's one or the other. Which ones are going to be first is the question. Financials, same routine. They're on basically a dead cat bounce situation along with everything else. And by the way, these other markets we just looked at, regardless of how much of a retracement they've done so far, regardless of the 200 points in the S&P they've done so far, it's still, in the big scheme of things, just a dead cat bounce. Now you get up to a 50% retracement, at least a 382 retracement. It's no longer just a dead cat bounce, but it's a decent bounce and it's a tradable bounce. And we did make purchases off the lows. We talked about them yesterday, talked about again today. I might have had too much caffeine today. Smash mouth, same routine. Is this going to be a low or are they going to come right back for a retest? Is this a dead cat bounce? Well, it needs more time to let us know what it's doing. We know the particulars. You get above today's high, which is also above Friday's high, and they start working their way up to the gap, and then above the gap, they start working their way up to the 100 period moving average and so on. And then you got a real bona fide retracement operation going on in there. If they can't get above Friday's high and stay above Friday's high, guess what? No dice. No shirt, no shoes, no dice. And by the way, I don't talk about it much. I don't talk about it in here at all. I'm aware of the discussions. I know what the whole pundit situation is with the Fed, interest rates, the economy. It's a slowing economy. There's a recession. The Fed's late, all that stuff. I get all that. I don't really care what the storyline is. It doesn't change what the numbers are. It doesn't change what the charts look like. It doesn't change if they're coming back to run a test of a former breakout area. None of that stuff matters. It's just made for TV stuff. I would rather focus on the technicals with you all in here. By the way, if I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.